Today is a very important news day in big tech. I've got a market update that you need to know about, something very critical going on in the S&P 500, and something about Honeywell that is just flat out interesting. Before I begin, I must remind you this is a financial education presentation. You must do your own due diligence before acting on anything you hear in the presentation. More disclaimer information can be found on AnkerstarWealth.com, and the opinions expressed are mine alone. We have the S&P 500 up about 1/3%, but the SPY, that ETF that tracks the S&P 500, is actually up about 85 basis points, or 85 hundredths of 1%. So there was a glitch on Friday where SPY and many other index tracking funds were not tracking the index. Remember, you cannot invest in the S&P 500 index. There is no way to do that. But there are index tracking funds like SPY, VOO, SPYM. There's a bunch of them that track the index, and they really do track the index one for one. So it is the same as owning the index. You just technically cannot own the index. But all day Friday, they were trading. They were disconnected from the index. And I noticed it was small throughout the morning and most of the afternoon, but right at the end of the day, that spread blew out. So the actual index traded very flat on the day. It was down less than 0.1%, but SPY ended the day down over 0.5%. And so that's mostly corrected today. Again, you want to watch it, but that has mostly corrected at this point to the tune of about 0.5% higher on SPY. So we called State Street at the close on Friday to try to figure this out. Obviously, if we're going to disconnect from the index on a holding that does exist across different model portfolios, and we're disconnected to the upside, that'd be one thing, but disconnected to the downside, that's not okay. They were saying that there was a data disconnect from the New York Stock Exchange that filtered through to all of those index funds. So it seems to have mostly been corrected today. I'm sure, well, when I spoke to State Street on Friday, they said it was a very stressful day because of that, and it looks like it's mostly been resolved. But of course, I'm going to be watching for every basis point. So, yeah, I think you think of 1 basis point on $1 million portfolio, that'd be like $100. And so 70 basis points or 50 basis points of disconnect on Friday, that's worth getting resolved. Also on the S&P 500, we are still trading in this range here that Ian McMillan pointed out last week. So kind of trapped between 72.60 and 76.30, something like that on the index. And then right this very second, we're sitting at 73.90. So just in that range, the market's going to eventually have to decide whether it wants to leave that range to the upside or to the downside. But for now, we've been here since the early part of May, middle of May. And we're about to enter July. So we're kind of settling into this range here. Things are, I guess, more or less pretty calm right now. All right. We have Google replacing Verizon in the Dow Jones Industrial Average. That happened on Friday after the bell. Today would be the first day that Dow Jones is trading in the that Google is trading in the Dow Jones. If we go to the Dow Jones press release, we can see another change as well. So Google replacing Verizon, Verizon heading out. Remember, both of those are communication stocks, so it makes sense for Alphabet, who is probably a better representation of the United States economy or the United States stock market for sure, in 2026 over Verizon. It makes sense for them to take the place in that communication slot over a Verizon at this time. And we know Verizon has fundamental debt issues and things like that. It's a capital intensive industry that they compete in, and they kind of end up behind that debt ball punishes them more and more over time. They do also mention that Honeywell has a big spinoff, so they're going to get Honeywell Aerospace started trading today. And Honeywell Aerospace will not remain in the Dow Jones. So you just getting Honeywell is going to remain that big industrial conglomerate, but it's not as big of an industrial conglomerate anymore because look at what they've been doing. Honeywell, you've got trading on its own. So that's your kind of core, what was thought of as the industrial conglomerate. And now they've got HONA, which is Honeywell Aerospace. Honeywell shareholders got one share. Basically, it was a split. So if you had 100 shares of Honeywell, you now have 50 shares of Honeywell, 50 shares of HONA. But don't forget, earlier this year, Honeywell also spun off Solstice Advanced Materials, which is up 65% on the year, and now up to $13 billion company there. And Honeywell owns over half of Quantinuum, I don't know. Honeywell is deep in the quantum space as well, with an $19 billion company there that they own most of. So Honeywell's doing a lot right now, and it reminded me of another stock, and this stock has been struggling, and I don't know how familiar some of you might be, but Abbott over these past couple of years is struggling. And sometimes, if you're just looking on the surface, right, you might think, man, Abbott, this thing is just terrible, which it kind of is, and it's been flat since 2020. You think it's terrible, but people forget with these assets, right? Because you've got Honeywell, HONA, Solstice, Quantinuum. You've got all these different entities that were kicked off of the original industrial conglomerate. People forget that AbbVie, so Abbott's worth 163 billion, right? If you owned Abbott, like in 2000, 2010, don't forget that AbbVie was actually kicked out of, it was spun out of Abbott in 2013. And AbbVie, AbbVie, the spin out company, is bigger than Abbott, which was the parent company. So Abbott shareholders, right, if you've been along for that ride for a long time, you're very much so at all-time highs. AbbVie actually hit an all-time high on Friday. And, these shareholders have been rewarded handsomely. Now, in the parent company, Abbott, that you haven't been rewarded on. But in the entities that get spun out, and this is what happens to these huge companies. Don't be surprised to see over time any of these companies. Could Google spin out Waymo, right? Could Amazon separate into multiple different entities? Of course. Could any number of companies, I'm sure even Apple could spin out maybe their chip division if they wanted to, or whatever. We see this time and time again where companies they'll divide and conquer. Basically, they'll split up, specialize in a thing, master that thing, and then grow that thing separate from the original parent company. This is one way to unlock shareholder value. And clearly, even though Abbott stock is dead money, AbbVie is not. And so who's going to be the big winner from Honeywell, right? Is it going to be HON? Is it going to be Honeywell Aerospace, Solstice Materials, the quantum asset? You don't know necessarily where the big winner is going to come from, but these huge companies have a lot of different ways to reward shareholders. All right, last thing, or two more things. So Google's capping Meta's Gemini use. This is another kind of feather in the cap of folks saying that compute is going to remain in a short supply environment for the very long term. And this news came out either over the weekend or on Friday. If Google's limiting Meta, who's presumably a pretty big client of their compute resources, if they're limiting them in favor of other needs for that compute, it shows you how tight things really are. Another thing, and this might be why Amazon stock is kind of surging today, but Amazon's upping prices on July 1st by another 20% on really all GPU compute, the B200s, B300s, H100s, H200s. So, and they just increased pricing by 15% in January. So they clearly have pricing power here. There's clearly tightness on compute capacity. and Amazon taking advantage of that through increased price. If we look at the AI story a little more long term here, we would expect the ultimate value, if AI, right, delivers on the promises, which you assume it will, you'd expect that the value would accrue to the companies who kind of own the compute infrastructure, and they can leverage that through pricing with customers. So if people want to accomplish tasks using the compute and AI compute more specifically, they'll be willing to pay higher and higher prices. And then, do we eventually get contracts where these companies are saying, hey, we want to replace these 10 employees that cost us, $1 million a year or something, or $2 million a year. We want to replace them with just compute, and we're willing to pay $500,000 a year on that to replace this $2 million salary cost that we're paying these people. So we could see more of that. I mean, that's kind of the goal of this. You don't spend trillions of dollars without going after a big market, and going after salaried employees would be kind of one of the biggest markets out there. We would expect value to accrue there. And then ultimately too, maybe it's a Walmart, right, who's paying for these resources to replace corporate employees for cheaper compute, theoretically. And you'd expect value to accrue there as well. So Amazon increasing price like they are aggressively here in just a couple days on July 1st is a good sign that all of that is working. Hey, I hope everyone has a wonderful day out there. And of course, look forward to talking to you soon.